Hello, my name is Ezra Beeman, and I'm Managing Director of Energeia. Welcome to today's Power Session webinar on optimizing EV incentives. Thank you for making some time to join us for what I believe to be a key topic of interest to the industry. We will start with some housekeeping items and then move on to the content. Uh, First of all, um, I'll be delivering this PowerPoint presentation, and then at the end there'll be time for questions and answers. You're welcome at any time to load in your questions, and they'll be answered in a first come first served basis. Sarah is standing by to curate those questions. The other thing that she'll be managing is our pop survey on what future topics we should cover, and we're interested in hearing your views. The other housekeeping item is that we will be sending out copies of the presentation as well as a link back to an associated blog tomorrow, along with details of our next power session scheduled for next month. So thank you again for joining. Today's topic on optimizing EV incentives is based on our work in this space. We do a lot of work in transport electrification generally, in forecasting transport electrification, and in supporting the development of optimized policy settings, regulatory settings, and industry settings. And we thought, based on how much interest there is around this topic and how important this topic is for the future of decarbonization, that it would be what we spoke about today. So I'm going to start the presentation now. The key topics we'll be going through are a review of Australia's transport emissions, what role they play or they could play, what we see as the key drivers and barriers of vehicle adoption, key policy and industry levers that could be pulled to try and improve uptake over time. And then we'll finish with a best practice case study from the US before concluding with key takeaways and recommendations. So in terms of Australia's transport emissions, we'll cover targets, emissions by sector, emissions by transport segment, and then finally focus on the road segment. So as we've said in previous webinars, Australia currently has a target that is slightly less aggressive than the Paris targets for 2 degrees warming. You can see that in the bottom left chart. Some of the states have committed to higher targets, including Victoria and the ACT, which are aiming to achieve their targets 5 years earlier than the Australian target. Now, in order to achieve those targets, you have to abate emissions across the Australian economy. You can see in the top left that electricity and stationary energy account for the lion's share of emissions in Australia. And by decarbonizing the power system and also the decentralized microgrid power systems, you're going to reduce emissions quite considerably. But the next sector is then transport. So let's turn to exactly what those emissions are comprised of. So in this slide, you can see we have broken out emissions by road, domestic aviation, domestic navigation, which is marine, railways and other transport. And here you can see that again, the vast majority of transport emissions in Australia are due to road emissions. Then breaking out the road emissions below, you can see that the vast majority here, or at least more than half, is passenger vehicles. The rigid truck and articulated trucks and light-duty commercial vehicles are almost as large, but not quite. And then you see buses is actually a small sliver. Interestingly, buses have been the focus of government policy over the last few years, and that is in some way due to the oversight that they have about what bus companies are purchasing for the delivery of transport services. But in total, they are not a significant portion of overall transport emissions. And to really support the target declines in emissions in Australia, transport's going to have to significantly increase its adoption of zero carbon transport options. So turning to what are the current forecasts, let's start with the market operator. These are draft forecasts from the latest, I think it's the latest IARP or IASR, sorry, Inputs and Assumptions and Scenarios report. You can see the step change is currently in the middle, and that by 2050, it's seeing about just over 20 million vehicles total stock. We are seeing something slightly less than that in our current house view. And I should call out that our house view will vary quite considerably depending on what the latest and greatest announcements have been across the country, particularly around rebates, particularly around infrastructure deployments, et cetera. Now, what we're showing here is work that we've done around path optimization by optimization of policy, regulatory, and industry incentives. This is not even the most extreme version of the optimized path, but it's one we think is definitely achievable were we to optimize incentives and remove barriers across the country. And that's really the point of what we wanted to walk everyone through today. So what are the key drivers and barriers to vehicle adoption? Well, if you ask potential vehicle owners, this is what you might find. So top left, you've got the EVC Consumer Attitude Survey from 2021, calling out that financial considerations are among the top, followed by charging, and then other things like the range of the EV models. But if you look at just the top three things, it's the upfront price, it's the accessibility of charging, and it's the range of the vehicles. We've also done surveys of the largest private organizations, businesses with fleets, as well as local council, and they're not too dissimilar. You see, cost is pretty much universally a concern. Model availability for the duty cycles that they have to buy their vehicles for, and also the ability to buy them in the case of the private organizations and with local councils, that they're fit for purpose and that they're available. So that's just a good backdrop to the research that we've got to show you today. So let's talk about vehicle availability. What do we mean by that? We mean the ability to buy a zero emissions once the power system is zero emissions, or you use a zero emissions fuel if it's hydrogen, in the particular make and model that you desire. And to the extent that you cannot buy it in the current make and model you desire, it's going to represent a barrier. And so one of the things we've been measuring for a long time is what percentage of makes and models are available as in an EV, or either a battery electric or a plug-in hybrid electric, but ultimately a battery electric vehicle. And you can see here that at the present time, about 20% of different vehicle classes, makes and models are available in a BEV variety. When you get into the commercial area, it falls quite significantly. And then we've got an estimate of what that looks like over time based on our research into OEM announcements, et cetera. And you can see the passenger vehicles are expected to quickly rise to about 80% by 2030. And that's going to be a key driver of availability, because people who want to drive a Ford are not going to drive something else. And the brand loyalty is real. One of the things we do want to highlight, though, is that there are an increasing number of OEM announced bans on internal combustion engines, and that has tended to increase our view as to vehicle availability over time. But at the moment, one of the key barriers, I would say, is the lack of availability of commercial vehicles. We're seeing a lot more of this in North America than we are in Australia. And we do expect the commercial vehicles led by companies like Volvo that have a wide range of battery electric options to try and catch up with where passenger vehicles are at the moment. The other key concern that we previously talked about was vehicle range. And one of the reasons why you have a limited range is the cost of the batteries in passenger vehicles. In commercial vehicles, one of the key issues is just how heavy they are and how that impacts on gross carrying capability. Ultimately, we do not believe that battery electric vehicles are going to be achieving um, range parity with internal combustion engines for many commercial vehicles, and that's because of the trade-off in load carrying capability, mostly for when we're hauling goods rather than people, but also the associated cost. And so you have here our latest view of what we think the range parity looks like for light duty vehicles and heavy duty vehicles. And this is also impacted by energy efficiency, which we see, particularly for light duty vehicles, as having significant room to improve over time. So just bear in mind that range we expect to improve significantly over the next period to 2026, but that we don't ultimately think that the heavy duty vehicles will ever reach the level of internal combustion engines. And there's no need to, based on the work we've done around what duty cycles look like, how long you can drive a truck, et cetera, unless you've got a two-person operation, and that's a pretty niche market. So in terms of vehicle purchase costs, what we've done here is lined up pretty much identical models that were ICE. So these are makes and original equipment manufacturers, or OEMs, that offer a particular vehicle in your choice of powertrain, really. And you can see that there is a significant premium today. That's largely driven by three factors. One is the lack of economies of scale. The second is the cost of lithium. And in Australia, you have the Australian premium. Um, but we expect those costs to fall with the fall in lithium primarily, and the increase in scale. And there was a recent news item that talked about lithium falling below $100 a kilowatt hour threshold. And I'm not sure if that's modules or cells, but they were making the point that that's the price at which battery electrics could see an upfront price parity with ICEs. The reason why you can buy a battery and still be less without financing arrangements is just because electric vehicles tend to have fewer moving parts. You don't need a transmission. You don't need the same type of engine, etc. So once that occurs, the data shows that we can expect a hockey stick change in the rate of adoption, and we'll get onto that in a second. In terms of maintenance costs, I don't know that anybody really thought that electric vehicles were going to be more expensive. They've got less moving parts. You don't have to replace fluids in most of the areas. But you can see here we now have some good research data that shows battery electric vehicles for passenger vehicles are less than half. Now, the problem with this particular measure or variable is that most people buy a new car, it's under warranty. You don't even see any of these costs really for the first 3 to 5 years. So it's not a huge factor. I would point out that our commercial vehicle data set is not nearly as complete, but we're working on improving that over time. Now, in terms of refueling costs, now there's a lot of assumptions baked in here. The key sort of views that we want to bring to bear are people charging at home, and that home could be at a commercial premise. We've done the analysis for that. We've done the analysis for public charging. And what we've found at the moment, with the assumptions you can see on the right, is that charging at home makes a lot more sense than public charging, about half the operating costs. Interestingly, sort of interesting, the public charging is coming out at about the same as the petrol range, although the pricing has bounced around a bit. So at the moment, unless these vehicles are lower cost to buy, it's generally never going to make the case that if you can't charge at home that this makes any kind of sense. And that's a big issue for those drivers that live in apartments, live in urban environments where they may not be able to charge at home because they don't have off-street parking. And I think one of the key messages I want you to leave with today is these segments that don't have an ability to charge at home in their garage overnight, and there's, I think, more of these than you might think, particularly in the urban areas, and some suburban areas. If you just look how many cars are parked out on the street, that public charging infrastructure needs to address, or these folks just won't have the opportunity. And it doesn't matter so much now when vehicles are more expensive, but when they fall and are no longer more expensive, then it's going to be a real fairness question. All right, public charging availability. Now, we've done a lot of work on this, and we have done designs of every state and across the country. Now, what we're showing here, though, are results from McKinsey in the work they did in Europe and ICCT, CEC, and NREL in terms of the ratios. And so you have a wide range of what these ratios are, and a lot of that is a function of assumptions around where people are going to charge. And so there's a big wide variation and a lot. Hello. All right. Hopefully, I'm back online. Apologies for that. So anyway, the point of this slide, or the other point of this slide, is on the bottom right side. You can see that as of today, Australia has more public chargers than anyone else in the world, which I was actually a bit surprised to see. I know there's been a lot of effort, and a lot of the states and the feds have come to the table here to make that happen. I think one of the other key messages of our presentation is it's not necessarily how much, it's where they're actually located that's a key driver of adoption. All right, let's turn to the different ways that policymakers, regulators, and industry could pull levers to try and boost the level of uptake in the coming years. What we have right here in the top left is what the current, I guess, scorecard is for different jurisdictions in terms of what is the share of total uptake that is represented by the BE electric vehicle segment. And you can see here that Australia is one of the lowest. Japan is about the same level, and you can see sort of the industry or the jurisdictional leaders are Norway and Sweden. And when we looked at Norway, the key threshold moment for them is when they geared the tax incentives to make electric vehicles less expensive to buy. And that was really the hockey stick moment of when things took off. But um, it the rest of our analysis found that that's fine in the short term, but over time, as you run out of folks that don't have any restrictions due to public charging, either you've got two vehicles and you can always take your gas vehicle, your ICE vehicle for longer trips, um, uh, there's only a certain amount of those segments, and after that, you need to make sure there's public charging, and ultimately, you need to make sure that there's availability of the electricity grid capacity. So we've done a high-level scorecard here about what's different among the different jurisdictions, and one of the interesting things is having an ICE ban or having a fuel efficiency standard. It does not seem to be the key driver here, and a lot of the reason for that, and I'll get into in the next slide or two, is that they're set so far in the future, 5-10 years, that they're not actually driving the uptake. What's driving the uptake really is the upfront premium primarily, and then what is the actual scope of the market as a function of what public charging infrastructure looks like. So here I'll just quickly touch on that the ICE bans are numerous and growing. and that by 2030, the actual number of countries where you can sell an ICE vehicle is going to fall precipitously to 10% of the OECD countries by around 2045. In terms of the fuel efficiency standards, we've got some information here that we've collected not that long ago, highlights that Australia doesn't have a target at the moment. Other countries do, including the EU and the UK, and New Zealand up to 2030. It again is not driving significant adoption in the near term just because of where the settings have been placed. In terms of the vehicle purchase rebates, Australia is starting to see more rebates. It varies by state, but they are still at the lower end of what we see in terms of other jurisdictions. And you've got them broken out there on the bottom left. So better, but not, I guess, industry leading. One thing we'd say about rebates, though, is if you're buying a $100,000 car, a $5,000 rebate is not going to have a huge percentage change impact. And so what we're seeing emerge as best practice is to spend more of the money on infrastructure, which is a key barrier for many, and maybe hold fire on those rebates until they can bring forward price, upfront price parity a few more years, and that can really bring forward that hockey stick, which has a pretty significant impact. So in terms of the incentives per capita for public charging infrastructure, again, Australia is one of the top countries out there. We've broken it out by where the money is being spent. But it's not, again, the investment in range extension networks are exemplary, and just the number per vehicles, but part of that is just how few vehicles are in Australia at the moment. In terms of charging tariffs, I think the key best practice that we've seen overseas is to actually develop tariffs that are specifically designed to remove the barriers or disadvantages that EVs are seeing with flat tariffs, or things like maximum demand tariffs that are not covering just the contribution to their connection asset. In Australia at the moment, we're seeing a much more limited amount of charging tariffs available. In terms of what we see as best practice, whether it's a flexible charging program, we're seeing a lot of trials there. Some of the retailers have them, but nothing looks like the work that we completed for ECA around what would a cost-reflective rate look like in a sort of prices to devices world. Here you can see that there's a big charge for avoiding the network peak, and much lower charges than we're seeing in any of the rates at the moment. So I think, and I'm a former rates manager, or a former tariff pricing manager. So there is still significant, I think, scope for industry to put in a compelling offer here. Other things, and I think this is an area that we're seeing come to light more frequently in North America, particularly California, but it was good to see the Australian DNSPs keeping pace here, and that's making sure that your connection policies, your capital contributions policies, et cetera, do recognize the potential volume that EVs represent, and provide a streamlined process for accessing them. The one area where I think the industry has some opportunities to improve the not immediate capacity, because there's certainly sufficient capacity in most cases to connect EVs, including fleets in most areas. The problem is that our estimate for an average fleet, so the actual like larger fleets or even at the upper quartile or above average, are going to be megawatt class connections. And although the grid capacity we've given you in a New South Wales example here is that there's a wide range of substation capacities, but most of the fleets are going to be concentrated in commercial and industrial areas, and that reduces significantly the number of zone subs. We just didn't have time to sort of focus on that here. But when you really get down to it, there is a significant risk that as we start hitting that ramp up, that hockey stick, that it's just going to get stopped in its tracks, because you can't just put in a capital plan overnight. It takes years and years and years. And so there's a real risk at the moment that we're going to see charging, especially if we get the other incentives right, and especially if these prices continue to fall, that there's going to be an enormous pressure on distribution networks to be able to interconnect that. And it all rolls up to transmission as well, because it get there's no diversity in the diversity gets wound up in kill. About best practice case study, lost a bit internet connection. So what we see as best practice at the moment is coming to optimization of the EV environment or conditions through an integrated approach, one that relies on analytics to identify, well, what is the relative contribution of different kinds of levers? And if I've got to put dollars into what I'm doing, some of these things are costless, right? Like having a cost reflective tariff is almost costless. It just opens doors without additional money. And DR programs are similar to that. Now, rebates and charging deployments or grants, those cost money. Rebates targeting accelerated retirement, those cost money. And so the question is, where do we put that money, and how do those benefits or impacts evolve over time, and who do they actually target? There's a real question about a fairness in all of this, that people that own their own home, have two cars, are one segment, but there's a lot of folks that are not in that situation, and it's important that they're able to access what will ultimately become a lower cost and lower emissions form of transportation. So pulling together a holistic integrated view is really important. That can then feed into the crafting of the strategies for given jurisdiction or initiative. What we show in the bottom left is that there was a target that was being aimed for, and we were able to estimate what the impact of the various options were and to help them put together an optimal approach given their budget and resourcing constraints. Had they had more money, they can lift that, but that's exactly what they're going now to try and get funding to do. Now, I realize we've got very few minutes left to hit our time frame. So key takeaways: acceleration of electrification is needed to achieve the targeted emission reductions, and that if we can make that lower cost, we can increase those targets under the Paris Accord. The barriers to EV adoption are falling rapidly, at least the barriers that are difficult to control, like vehicle availability, et cetera. We're seeing the inflection point in the next 3 to 5 years, depending on the jurisdiction and the settings. There are a lot of levers that are able to be pulled, and it's important though that they're pulled, I think, in the right priority order. And for us, what we're saying is the medium-term barrier is putting in public charging infrastructure in the right places to serve all segments. And medium-term, it's that grid access question. So our recommendations is to develop and implement evidence-based designs of the infrastructure needed, especially for everyday charging. Develop those HV feeder level forecasts. There's some uncertainty involved there, but it's important. This is probably the most significant growth. I mean, it's going to make air conditioners look like a walk in the park once we start hitting that hockey stick. And I would suggest looking at highly cost-reflective tariffs and incentives and associated programs. This is a very flexible load. There's just a huge amount of opportunity out there to get this right. And finally, to look at this on an integrated basis. So apologies, I had to blow through that so quickly. Hopefully, you still got a lot out of it, and I will start taking questions. If people can stay a bit longer, I'm able to stay a bit longer, but appreciate also that everybody's very tight on time. So let's start with Q&A. And also, don't forget to vote before you head out, and tell us, what our clients are interested in hearing about next. So in terms of questions, let's start at the top. Tim asks, I think the New South Wales budget changes to remove EV rates and stamp duty exceptions, and reallocation to EV charging subsidies. Yeah, as policy maturity, do you agree? And I think what I've just displayed, appreciate you asking that question before I got to the end of the presentation, but based on what I've seen and based on the analysis we've done, rebates could be better spent. Like if you just had one, like if you have finite resources on public charging infrastructure, and it is so easy to be inefficient in public charging infrastructure. So I want to hedge my statements by saying, it's a much better investment as long as you make good investments in public charging infrastructure. If you just put them out willy-nilly or where everybody votes they should be, it may not actually be a better investment. Next question from Gabriel. Does the vehicle availability model cover China OEMs? It is to the extent that these are being imported into Australia. And I do recognize and acknowledge that China's got a very strong policy. In fact, when I went to the EV event in Darling Harbour 6 months ago, it was 80-90% Chinese models. Okay, Tim, how much of an issue is LCV lifetime customer value playing to the delta between IC and BEV equivalents? Oh, I'm not sure I totally understand that question. What I would say about LCV is that a lot of light duty commercial vehicles don't actually do that many miles. And so to the extent that they're more expensive, it might be harder to actually make the numbers work. In the work that we've done, it's really the long haul, the articulated trucks that do the miles that make the business case. And then the issue is you can't actually buy them yet in Australia. But they are emerging, and we do expect that to be one of the strongest business cases. All right, Tim. Let's see. Where are we heading on BEV post-sale subscriptions that appear to be a source of current and future tension? Ha! I think this is referring to the BMW seat heater challenge. But it could be for your autopilot at Tesla or anything else. I mean, I don't know that that's specifically a transport electrification question. And I think, I've heard of subscriptions for your battery to turn that upfront cost into an ongoing cost. That's not necessarily a bad thing. Nick, okay. With respect to adoption barriers, is there a way to optimize public charging placement for adoption? Yes, there is. And we have done work, and there's a webinar that we presented earlier on exactly how that should be done. And it really is about ensuring all drivers have access to a convenient EV charger and that they have a guaranteed place to charge, or at least they feel like it's guaranteed, because nobody's going to buy a vehicle on the 90% probability that they can charge, right? Like it's a non-starter. So look at our webinar on optimal charging infrastructure design for some I guess information about how we recommend doing it. And it makes a big difference. Like the cost of infrastructure for a given number of drivers is like less than 50% of what it is if it's not done, if it's done in a more top-down basis, I guess. All right, Gabriel. Oh, nope. New Chinese are not in Australia. Has the team considered these? No, we haven't. And the Chinese EV makers that are not here yet have to create their own space. And as we start to see what that looks like and how well they do, that'll get factored into our forecasts. Tim, the rebate seems to miss out the FBT exception. No, you're right. You're absolutely right. And it's actually quite a big deal given how many folks lease their vehicles. So nice one there. And at some point in the future, it'd be good to update this so that we can include the FBT. But again, the rebate's part of the question, and we do need to get the upfront cost lower. But we think that the barrier is going to be in infrastructure initially, and then in the grid. The slides are not legible. I'm hoping that that's not the case for everyone, but we'll work on it. Oh yeah, connection speed. So Daniel, looks like fuel costs for charging from home solar. Yeah, no, that's another good point. So, if you've got solar at your home, then that is going to change things. Not available for anybody who's got a commute though, because your car is not going to be home when the sun shines. You can put in a battery, etc. But again, that's another way to bring costs down, and the synergy between solar and storage is an important consideration. The subsegment of the population from this is possible is surely going to adopt at high rates and bring forward economies of scale. I agree, and we have looked at correlations between the two. They weren't that strong. They weren't as strong as other things like income levels, etc. But just looking at the economics, it seems like a really strong case, particularly if you're working from home or you're retired. Basically, that your car's there during the middle of the day because that's the cheapest power on the planet. Archer, sorry. More states announcing pulling rebates incentives. Latest one being New South Wales. The treasurer claimed the incentive had no effect. Levels, do you have access to their analysis? Unfortunately, we do not have access to analysis. It would have been nice to have been involved in that, but we have done very detailed analysis of customer price elasticity and demand using very granular data that's now being published. And we did see that there was an impact, particularly on SUVs, unless I'm mistaken. Um, but the amount you're paying per impact on EVs and also exactly which segments you're subsidizing, I can see why the states have pulled out. Now, I think based on our own analysis that incentives, when the price differential between internal combustion engines and BEVs is less than 5K, a 6K subsidy is going to make it $1,000 more to drive internal combustion engines, and I think that's going to be the threshold moment when the industry is really going to be trying to figure out how do we actually connect up all this load. Daniel, do you have a view on what proportion of charging will be public versus private in, say, 2030? Your findings that charging costs seem to skew in favor of private charging at home. Yeah, I think anybody who can is going to charge at home. I mean, depending on your views of how many two-car garages are out there that can handle the upgrade, and also what part of the country you're at. In country, there's usually a lot of space, but versus suburbia, etc. So I think the range that we've seen is somewhere between 30% of vehicles charging at home if you're in Melbourne or Sydney, to something higher, maybe 50% if you're in the country. But it really depends on the specifics on the ground. Okay, Adrian, do you think vehicle to grid, vehicle to home, etc., will be useful to accelerate EV adoption in Australia? I do. I think the potential for vehicle to X is really underappreciated. Vehicles are going to be the #1 battery source in the country in the same way that rooftop PV is the largest renewable generator in the country. And how that gets tapped into is going to be very, very interesting. How much people, how that gets worked out by smart analytics. I haven't asked ChatGPT, but I wonder what they'll say there. But we think it's a really big thing because we've got two vehicles that's maybe 200 kilowatt hours, maybe 150 kilowatt hours of battery storage. That's 10 times more than your Tesla Powerwall. You can run for a week. And I think what kind of service offering as an energy retailer do you make this company, right? This premise, because they've got more to sell than they have to buy. They can buy power whenever it's really, really cheap and then not buy it for days. So it's going to open up a whole new world for the energy system in so many ways. All right, apologies for going over this time. I hope everybody got a lot out of that. Please join us next month. Please take a look at the email when it comes through tomorrow, and I'll always appreciate any feedback that you give. Wait, a final question. Do you have more insights on Aussie commercial fleet electrification? How do fleet managers approach the problem? How are they planning their duty cycles? How are they done? So we've done projects on fleet electrification. Maybe follow up separately. Happy to talk to you about that. Main issue for fleets at the moment is just getting access to vehicles. All right. Thank you, everyone. Have a great rest of your day. Appreciate it.